We are covering these 5 top large cap stocks with big percentage moves today. While watching bullish price actions, let us inform you our review on RDUS. RDUS Recycling Incorporated, a leading North American manufacturer and exporter of recycled metal products, is at the center of a major acquisition deal with RDUS USAR America valued at approximately $1.34 billion. The announcement sent shares soaring, reflecting strong investor confidence in the buyout's valuation and strategic potential. However, scrutiny around the deal is emerging, with law firm Swick & Fody, LLC investigating whether the sale adequately serves shareholder interests. As part of the agreement, RDUS Recycling has committed to a $27.2 million termination fee if the transaction is canceled under specified circumstances. This clause underscores the significance of the deal while adding a financial consideration in the event of unforeseen complications. The potential acquisition by RDUS USAR America could bring strategic advantages, providing RDUS Recycling with increased global scale and integration into a larger industrial network. However, investors should remain attentive to regulatory reviews, shareholder lawsuits, and possible competing bids, all of which could impact the final outcome. With shares experiencing a sharp rally, short-term stock performance is benefiting from the optimism surrounding the acquisition. Long-term investors should evaluate the implications of the buyout, including the potential for further negotiations or legal challenges that could alter the transaction's final terms. Our review on USAR Rare Earth Incorporated and Inflection Point Acquisition Corporation II have successfully completed their business combination, a significant milestone that positions the company to advance its goal of building a domestic rare earth magnet supply chain. With the transaction finalized, USA Rare Earth's common stock and public warrants will begin trading on the NASDAQ under the ticker symbols USAR and USARU, respectively, marking its transition to a publicly traded entity. This development underscores the company's strategic focus on securing a stable and independent supply of rare earth materials critical for industries such as renewable energy, defense, and advanced technology. As part of the deal, USA Rare Earth secured an additional $8 million in PIPE funding, increasing total investment from Inflection Point affiliates and other pre-funded investors to nearly $50 million. This upsized investment signals strong investor confidence in the company's long-term vision and growth potential. The additional capital will support the expansion of USA Rare Earth's mining, refining, and magnet production capabilities, reinforcing its role in reducing dependence on foreign rare earth supply chains. The company's public listing arrives at a time when global demand for rare earth materials is rising due to their essential use in electric vehicles, wind turbines, and defense applications. As geopolitical tensions and supply chain security concerns continue to drive the need for domestic production, USA Rare Earth is well-positioned to capitalize on these trends. However, investors should closely monitor market reactions to the stock's debut, execution risks in scaling operations, and broader macroeconomic conditions that may impact the rare earth industry. With significant capital backing and a clear strategic vision, USA Rare Earth's entry into the public markets marks a key turning point in its development and expansion efforts. Our review on QBTS. D-Wave Quantum Incorporated delivered a mixed fourth-quarter financial report, reflecting both substantial advancements in quantum computing adoption and ongoing financial hurdles. The company reported an adjusted earnings per share loss of 8 cents, slightly missing Wall Street expectations of a 7-cent loss. Quarterly revenue declined 21% year-over-year to $2.3 million, falling short of the consensus estimate of $2.36 million. However, a major bright spot was the company's fourth quarter bookings, which surged 502% to $18.3 million compared to the prior year. This sharp increase highlights the growing commercial interest in D-Wave's quantum computing technology and underscores its expanding footprint in enterprise applications, despite the revenue shortfall. D-Wave's gross profit for the quarter declined 28% to $1.7 million, with gross margin compressing from 80.2% in the prior year to 73%, reflecting some pricing and cost pressures. Additionally, adjusted EBITDA loss widened 41% to $15.3 million as the company continued to invest in research, development, and commercialization efforts. While profitability remains a challenge, D-Wave significantly improved its liquidity position, raising $161.3 million through at-the-market and equity line of credit common stock issuance programs. As of December 31st, 2024, the company reported a cash balance of $178 million, which has since grown to over $300 million as of the latest earnings update. This strong capital position provides the company with substantial resources to accelerate growth, advance technological innovations, and support strategic initiatives aimed at driving broader market adoption. Looking forward, D-Wave has set ambitious goals for 2025, forecasting first quarter revenue to exceed $10 million, with a significant portion coming from the sale of an advantage annealing quantum computer. This represents a notable milestone in the company's transition from a primarily research-driven entity to a commercially viable quantum computing provider. As organizations across industries, including logistics, finance, and pharmaceuticals, increasingly explore quantum-based solutions, D-Wave's technology is gaining traction for its potential to address complex optimization problems and enhance operational efficiencies. CEO Alan Baratz highlighted the company's momentum, emphasizing record bookings, an improved cash position, and a recent breakthrough demonstrating D-Wave's quantum system outperforming classical computing in real-world applications. He stressed that these developments validate the company's mission to bring practical quantum computing solutions to market. Despite ongoing financial pressures and the need to balance rapid growth with cost discipline, D-Wave's increasing enterprise adoption and strong capital foundation position it well for long-term success. Investors will be closely watching the company's ability to convert its technological advancements and rising bookings into sustained revenue growth while navigating the evolving and competitive quantum computing landscape. Our review on AKBA. Akebia Therapeutics Incorporated reported mixed fourth quarter financial results, with a GAAP net loss per share of $0.10, falling short of analysts' expectations of $0.08. However, revenue of $46.5 million exceeded forecasts by 24.5%, though it marked a 17.3% year-over-year decline from $56.2 million in the same quarter last year. The revenue beat was largely driven by continued demand for Auryxia, Akebia's FDA-approved treatment for hyperphosphatemia and iron deficiency anemia in chronic kidney disease patients. However, the year-over-year decline reflects ongoing reimbursement challenges and market competition. The company's second key asset, Vafseo, an anemia treatment approved in 36 countries, remains unavailable in the U.S., limiting its full revenue potential. The larger-than-expected quarterly loss reflects ongoing investment in commercialization efforts and pipeline development, including investigational candidates AKB, 9090 and AKBA 10108. Despite the strong revenue beat, investors remain focused on Akebia's ability to expand market access, navigate regulatory hurdles, and manage costs effectively. The company's progress in gaining broader reimbursement coverage and advancing its pipeline will be key to long-term stock performance as it continues to position itself in the competitive nephrology and anemia treatment markets. Our review on GRRR. Gorilla Technology Group Incorporated has revised its full-year 2025 revenue guidance upward to a range of $100 to $110 million, an increase from the previous estimate of $90 to $100 million. This adjustment highlights the company's confidence in accelerating demand for its AI-driven security intelligence, network intelligence, and smart city solutions, reinforcing its growth trajectory in the expanding digital infrastructure and cybersecurity markets. The raised guidance reflects increased adoption of Gorilla's AI-powered offerings and strategic expansion into new markets. A significant driver behind this optimism is Gorilla's newly announced partnership as the exclusive AI and digital infrastructure provider for the Global Edge Worldwide Fund, a $100 billion investment initiative launched by Renato Costa, CEO of Brazil Invest Abu Dhabi Investment Fund. The fund, unveiled in a worldwide exclusive on Schwab Networks, is dedicated to transforming digital ecosystems across the Americas, with $20 billion allocated to the U.S. and $80 billion directed towards South America, including Brazil. Through this partnership, Gorilla is well-positioned to play a critical role in large-scale AI infrastructure projects, potentially unlocking substantial new revenue streams and long-term growth opportunities. As Gorilla Technology continues to expand its presence in the AI and cybersecurity landscape, investors will be monitoring how the company capitalizes on this strategic partnership and executes on its growing pipeline of opportunities. The increased revenue outlook, coupled with its involvement in one of the largest infrastructure investment initiatives in the region, signals strong momentum heading into 2025. Please subscribe, give the video a like, and watch more from our playlist. Thanks.